This week, will FHA foreclosures tank U.S. home prices? More after this short message.
Building relationships is the way Mutual of Omaha has grown into one of the leading financial services companies in the world. Our reverse mortgage wholesale division is proud to carry on this 100-plus year tradition. To your borrowers, a reverse mortgage is more than a transaction. It's a promise of a better, more stress-free life. Our goal is to provide you, our valued client, with the best service and support possible so you can focus on helping your borrowers achieve the retirement of their dreams.
Welcome back. First, I want to bring to your attention an error I made in last week's episode. So when I was illustrating the advantages of a HECM for purchase, I inadvertently switched the lender's contribution with the home buyers, and that of course, skewed that illustration significantly. I do want to give a big thank you out to Mark Richards, who kindly brought that to my attention. So if you'd like an accurate HECM for purchase scenario, you can watch this week's podcast, HECM World Weekly, the video edition, which is at HECMWorld.com. Now on to this week's topic, FHA foreclosures. Now, while the FHA insured home equity conversion mortgage certainly stands apart from traditional FHA loans, the housing agency's silent attempt to snuff out foreclosure starts has raised concerns about whether a backlog of FHA foreclosures will impact traditional or even reverse mortgage lending. But before we begin, I want to thank you for liking and sharing these videos and subscribing. It really does help our YouTube channel. Also, please consider subscribing to HECMWorld.com for all of the latest reverse mortgage commentary, news, and analysis. Will FHA mortgage defaults tank U.S. housing prices? Well, first, let's understand today's mortgage lending standards. Now, to help to reduce the likelihood of a future foreclosure, lenders will look for a total debt-to-income ratio, or DTI, below 36%, with no more than 28 to 35% of that debt going toward the mortgage payment, property taxes, and insurance. A recent Wall Street Journal opinion piece reports that during the Obama administration, the federal government loosened underwriting standards, allowing more homeowners to qualify for a government-backed FHA mortgage, with total debt-to-income ratios that exceeded 43%. With that in mind, are FHA loans more likely to result in a foreclosure? The answer may be found in the agency's mission itself. FHA financing is designed to help borrowers, especially first-time home buyers and those with lower credit scores, secure mortgages with more lenient qualification requirements. If a property owner defaults on their mortgage, FHA steps in to compensate the lender for the outstanding principal balance. Simply put, FHA loans are backed by the U.S. government, and that's you, the U.S. taxpayer. But this allows a lender to offer down payments as low as 3.5%. Does that sound risky? Sure. FHA loans are more likely to attract borrowers with higher levels of non-mortgage debt and less skin in the game because they have a smaller down payment, which can create problems down the road. So how are recent FHA loans faring? Do you remember 2022? It was a crazy year. The housing market was white hot with speculation, all cash down offers, and some of them even sight unseen. So let's see how FHA borrowers who bought a home during that time are doing. Well, it turns out not very good. FHA's single-family loan performance trend reveals that over 17% of FHA home buyers from 2022 are currently delinquent. And that should come as no surprise. In 2022, the pace of home prices and inflation were at their highest point. Then later, home appreciation rates slowed to nearly single digits in most metros. In other words, Uncle Sam was encouraging first-time home buyers who were smitten with a bad case of FOMO to purchase a home that would likely become unaffordable in the future. Now, these borrowers typically had less than great credit and substantial non-household debt. The Wall Street Journal reports in 2007, 35% of new FHA borrowers had combined debt-to-income ratios above 43%. By 2020, 54% did. And that's not all. Today, FHA allows for an overall debt-to-income ratio to be as high as 57%, depending on the lender. Where is there any money left for gas or groceries or saving for retirement? Now, consequently, many recent FHA borrowers are skating on thin ice. The American Enterprise Institute's Ed Pinto and Tobias Peter estimate that 79% of first-time FHA borrowers have a month or less in financial reserves, and that increases the likelihood of foreclosure. Now, knowing this, you may be asking right now, well, if the economy is on such shaky ground, why don't we see more foreclosures on the market today? Is this what's been propping up home prices? Well, I'm glad you asked, and it's because, in one simple phrase, we kicked the can down the road. The Journal reports that of the 52,000 plus FHA loans made in 2024 that were seriously delinquent, only 9 of those resulted in a foreclosure. 9. How is that possible? Well, you simply dump in money from the Treasury. It's reported that the FHA made 556,000 incentive payments to loan servicers over the past year to prevent foreclosures. That's nearly as many as the new mortgages that FHA insured during that same time period. Also, the deadlines for foreclosure moratoriums and loan modifications were repeatedly extended during and after the COVID pandemic. So why are we seeing so few foreclosures on delinquent mortgages? One reason is that FHA pays loan servicers to reduce their payments in a modification, reducing their payment by 25% or more. And those reduced payments are added back to the principal balance. And as a result, many FHA borrowers could find themselves underwater, owing more on their home than it's worth. And that is the same moral hazard, by the way, that led many homeowners to simply walk away and hand the keys to the bank during the great housing crash of 2008. Now for this week's question. If FHA foreclosures, surge, would overall home prices collapse? Well, let's find out. First, let's see what percentage of the U.S. housing market consists of outstanding FHA loans. This Fred chart shows that the total balance of all outstanding FHA mortgage loans is $36 billion. That's a significant number, but should we be concerned? To answer that, let's determine the size of the entire mortgage market. Now, keep in mind that this chart is based on billions of dollars, which means that as of the third quarter of 2024, the total outstanding residential mortgages for 1 to 4 unit properties stood at $13 trillion. Now, with just $36 billion in outstanding FHA loans, that represents only 0.27% of the overall mortgage market. And that's just over 0.25%, as we know, of all outstanding mortgages in the U.S. Now, despite only accounting for a fraction of overall mortgage lending, FHA loans could reveal the early signs of economic stress on lower income borrowers. However, the more meaningful metric is the number of loan defaults and pending foreclosure starts on conventional loans, which remains, by the way, very low. Now, sure, some of this can be attributed to the government's ongoing foreclosure prevention programs, but in the end, I believe that it's likely to take a major economic black swan event to collapse home prices on a national scale. Now, what are your thoughts? You can leave those in the comment section below, and please share this video on your LinkedIn network. We appreciate those of you who do that. As we mentioned earlier, we have a YouTube channel, so you don't want to forget that. You can subscribe and hit the like button if you found any value in today's episode. And each and every week, we curate the most relevant reverse mortgage news for you as a mortgage professional in our weekly podcast, HECM World Weekly. We have both an audio and a video edition. The audio podcast you can listen and subscribe to on Apple Music and Spotify, and also on Podbean. And of course, our video edition, which has that corrected HECM for Purchase scenario, can be found on HECMWorld.com. Thank you so much for joining us, and be sure to return next week for more reverse mortgage news, commentary, and analysis you'll only find here at HECM World. Have a great week.